Hey guys, welcome back to the NFL Players Podcast. I'm your host, Zach Miller. So this week, I'm really excited. Just got done with a Next Play Fellowship program put on by Next Play Capital, and really excited to have this guest on, Akbar Gbajabiamila. Did I get it right?
You did get it right,
Man.
man. That's a mouthful to say.
And so NFL veteran, no stranger to the camera, has done NFL Fantasy Live, currently American Ninja Warrior, huge in the community. I saw you're a board member on Namdi Asamoah's charity, who I know well from Oakland. You wrote a book, Everyone Can Be a Ninja. I think that's super, super awesome. Obviously, I haven't read it yet, but I plan to because of just getting to know you through the Next Play Capital Fellowship. It's been great to get to know you. So appreciate you joining me. And you're also a father of four. I have four kids, so definitely relate to you there. So appreciate you coming on.
And thank you so much for having me. It was pretty cool too, just to get a chance to, having watched your career, talked about your career on, the NFL Network, and just to kind of be in this kind of fellowship to kind of learn about this different, about VC. This was something that was always interesting to me. I didn't know a lot about it, and it was Ryan's persistent pursuit of trying to get me educated in this area that Ryan Neese, as far as who we're talking about, just his constant pursuit and trying to get me more aware and knowledgeable about VC.
Yeah, and I think that was one of the biggest things for me in the Next Play event is having gone back to school, got my finance undergrad, done corporate finance, done the certified financial planner education, and in the exam. I mean, you just don't cover venture capital like we just did over 2 weeks. I think it was a hugely beneficial program, and obviously something I wish I would have been able to participate as a player when I was still young and have a chance to just be informed. So many guys, and we see it all the time. If you're not informed, you're not educated, you can make a lot of mistakes. And so I think that's one of the biggest things. And, why I do this podcast, why I talk about, so many of the financial strategies, tax strategies that I do on the podcast is because when you're young, you just don't have the business experience to know what's out there.
Right.
And that was myself included. I could have had much better financial management, and a lot of people can say that, but when you're young, it matters so much more. You gotta learn at a faster rate than your own experience.
Yeah, I mean, especially because Zach, we know this because we went through the process. But you want to be able to take advantage of your high earning years, and not to say this is going to be the only high earning year you have, but when you're young, you want to be able. That's when you can be the most aggressive. When you're talking about investing and learning about the different asset classes. And that's something, for example, I didn't know about. I mean, I just hey, you get your money when you're coming into the league. Get your money. Get a financial advisor, put your money with the financial advisor, let them invest, and then you just go, everything else is a scam, right? Like, oh, don't worry about it. And then you realize too that, like financial advisors, they have their own motives where, hey, you just give me your money. I'll obviously make a percentage off of that. I'll invest and don't worry about anything else. You just go play football. And I think so many guys get that. And then you don't put yourself in those positions to learn about that. But venture capital was just one of those things like, oh, put my money away and I don't see it for 5, 7, 8 years. Nah, something's wrong with that. And then once we got into this fellowship with Next Play Capital, it really broke it down to where we got a chance to see 360. We had a chance to see it from the venture capital's perspective, their POV. We got a chance to see it from the investors' POV. We got a chance to see it from businesses, the business owners who are trying to start business. So you got a chance to see kind of how it works all together, and looking at that ecosystem made me more encouraged to like, hey, I'm like you. I wish I would have done this earlier. Like, I should have done this earlier. But you know what? It's never too late.
I thought the whole thing was well done. Obviously, it's fast paced, and it was, I mean, a little bit of a struggle to keep up with the assignments
Yes.
and kind of the workload because of how much information they were throwing at you. But I thought with I like the finance side of it, so just seeing cap tables and how the industry works, kind of the engineering behind it, and how there's a process involved. Like, and this through broadcasting, and there's a process to everything. And if you want to be able to repeat success, you have to have the right process. So, just seeing how Next Play does it, we can't get into too many details here, but it was awesome to see just how that works, and why it's such a competitive landscape. And to your point on the seeing the founder side, the entrepreneur side, and then having to make your own pitch essentially was tough, because it made you think about fundraising and all the ways that, as a player, you're hit up as the guy that has the funds that they want to raise money for. So you get to see it from that perspective of, okay, is this a company that I should put any money in, and should I even be doing direct investments? Did you like doing the whole
I
pitch deck and
I
everything?
did. I really enjoyed it, and it gave me a little insight. So, and I think I shared it during class. Like during the pandemic, I was like motivated where I wanted to do something to help out and contribute. So I took like $50,000 of my own money, and I started to develop a mask. Right, and as I'm starting, I've never been in the mask business. I don't know anything about designing masks, and so I got some engineers and I got some people who did some 3D modeling, and we're going through, and I'm on the phone with people from the CDC, and I'm just trying to create this thing because what I didn't want to do is, and this is what motivated me, I didn't want to get to the season of American Ninja Warrior and go, we're not going to have any fans. I need the fans so I can feed off their energy. I'm like, well, if I can design something, then the fans can wear it, and then the NFL fans can wear it, and this is the mindset. And I got to a certain point where I just said, I can't put any more money into this project because this is going to go nowhere. I reached my level of competency and said, hey, I need to get some more money involved. And I stopped the project at that point because I didn't know how to pursue to get more money, bring in what we learned in Next Play Capital, and I realized all the different holes. Now I can look back now and laugh at myself. Like I had a cumbersome mask that I was trying to design. I don't think anybody in their right mind would have worn it, but early it felt like this is where the world was going. We're going to be wearing these big old shields over our face
Yeah,
because everybody was
for years,
for
yeah.
years. I was like, oh my gosh, we're all going to die from COVID-19, but anyways, it gave me perspective. I'm like, hey, if I were to go, I now know how to do it. If I were to start a business, I think I know how to raise money and how to approach a venture capital.
Yeah, and I think it's so valuable to understand that early on, is that there's it's not just about having a good idea, it's the execution and being able to get it. I mean, grow a business from the startup is not an easy job. And as much as everyone wants to be invested in, whether it's uh, all the startups that came out recently, whether it's like Lime or Rubrik, Impossible Burger,
Mm.
Coinbase, just to name a few. You want to be in those. I mean, so many have failed, that don't ever make the headlines because they go out of business, they go bankrupt.
Yeah.
So it's such a risky asset class, and so to have the kind of have the tools of how it's done professionally, and then just understanding how the fundraising works, how do you actually decide on who to take funds from. If you have a great idea, you're going to have a lot of venture capital firms um, competing over getting an investment to you. So you get to say, well, I don't necessarily need the most amount of money. I need a strategic partner that can come in and help me bring this product to market. And I thought that was one of the things is often overlooked is the strategy of who you partner with, in making your dream, or your founder, or your baby, your idea of whatever it is that's going to be great, finding someone to help you bring that to success.
Yeah, and that was part of our presentation, right? We had to figure out, okay, for our model that we did a a food product, and we had to go, okay, well, which venture capital would be interested in? You couldn't just pick one out of thin air. You actually go through, do your research, and figure out who's investing in this area, and so that was interesting just to even know that there were just different types of VCs. You would think to the person who knows it that that's common sense, but just because you're a VC doesn't mean you're investing in technology. Like now they have their, obviously VCs who does that, but it was really cool. I think the other interesting part as well was knowing who the team is made up of, because that's important. Or even when you're trying to find that, being able to connect, and it's like, okay, how do you make that connection if you're trying to raise money? And you remember we had to kind of, okay, hey, I met this person through Zach, and Zach is a good friend of mine. He told me to call you, rather than just picking up the phone and just calling a random VC firm and going, "Hey, can you give me some money?" Because like, what? How does that work?
Yeah, yeah. It's why Silicon Valley has just been so popular as an area of just ingenuity, innovation, and it's its own little community of producing just top elite companies year in and year out. And so and they hit it on the first day. Really, was that access matters, and I know this just from all the all the finance experience I have now, that the top firms tend to repeat. And I think the analogy is a perfect one. It's like the college football teams, your Alabama, your Clemson's,
Yep.
Ohio States. They just get this. They get the top talent, and they can reproduce every year, and they're in the college football playoff. And it's no different than the top venture capital firms. The best deals are going to them because they're getting the best talent to work for them. They have the networks, and then they have the connections to see an investment from a startup all the way to an IPO or however far it ends up going. So seeing the process of seed capital all the way through to Series A, B, C, and on, really is, I think, a huge deal. And it's not that difficult to understand, especially when you stay high level. And just like this, specialized venture capital firms are no different than NFL players specializing at tight end or defensive line or linebacker. I
I've
mean,
never thought
as
about
you,
that. That's pretty interesting comparison there.
yeah, I mean, you don't want a whole team of essentially, quarterbacks. They wouldn't be very good. So, as you specialize in each area, it's no different in whether it's investing and you're thinking about a broad level of asset allocation and, your public market equities, your, stocks, bonds, and then venture capital. And I thought some of the discussions on high level asset allocation is really good because personally, I never allocated anything to venture capital. And full disclosure, our clients are invested with Next Play's funds, and
How,
I
how did
think
that come about?
a
How, how did that come about for you, if you don't mind me asking?
Ryan Neese has just been close with our partners, Brandon Averill, Eric Averill, Robbie McConchy, and really, you know, getting to know Ryan Neese was, I mean, just huge because when it comes to venture capital and especially fund of funds, you're investing in people a lot of times. And so you got to really vet the people who are doing the investing. And that's included with when you're actually doing a direct investment, whether you're doing a fund of fund strategies. Obviously, the fund of fund strategies is less risk. You're more diversified. Direct investments, if you're doing angel investing, it's just too hard to allocate enough money spread out to really be spread around your bets, because it is a fail rate. It's just we heard from some of the speakers, the fail rate on some of the early startups is just such a low number. You need those huge gains in the small ones, in huge gains in some of the really small companies to end up paying for so many of the losers. And that's totally different than the public markets. So you really have to, you don't want to obviously go all venture capital, even though they can have really nice returns if you have the right access. You got to really frame it around, why am I investing? Am I just trying to get returns, or am I trying to reach an outcome? And what's that outcome that I actually want? And then you construct the portfolio for the client. And so, I mean, the whole Next Play framework and how they go about their company, their standards, their values aligns with ours here at AWM.
Yeah, and I think I can say, even though, like for me, I look at, Next Play Capital, and I think that it's the same thing. Like, when I decided to invest, I think a lot of that had to do with, and you just said the fund to fund, you're investing in the people. And I think just, I've known Ryan and Next Play Capital. I've been aware of them for 4 or 5 years. I mean, but I've known Ryan longer, but it took over time of just being educated over the process. And you very rarely see people who are genuinely interested in educating you about the process. Oftentimes, like, you take, for example, and not to say that life insurance products are bad, but you'll get life insurance agents who will go, hey, buy this, buy this, buy this. You got to get your whole life, and you got to get the universal life. And they're selling you products rather than educating you and they're maybe just cherry picking some of the advantages rather than going, okay, how does this fit into your overall picture? Because you just mentioned it. What's your end goal here? If you don't know my end goal, how are you going to sell me this product that I don't want? And for players who are insecure, I know I was as a player very insecure, and so there's going to be two things you do as a player if you're insecure, or anyone. You don't even have to be a player. I mean, just
Yeah.
but anyone, if you're insecure, you're either going to hold back or you're just going to go, I don't want anybody to know what I don't know. So I'm going to say, oh, yeah, here you go. Here you go. Here, just take everything. And you give trust before you've even vetted it out because you don't want to look like you're incompetent. And so for me, I've always been the person, if I don't understand something, I hold it close. I'm going, look, it's just not for me until I understand. If you can't convince me and make me understand, then I'd rather miss out on $1 billion than to give up what I have just because you think it's the best for me, if that makes sense.
No, that makes total sense. And I mean, I was the same way as a player. I just had so much pride and, I thought I knew everything. So you don't want to admit like, oh man, I didn't know, basic personal finance rules, like, whether it came to credit card debt, mortgages, things like that, I definitely could have done better along the way there. And really, I think there's good tools out there, and there in NFLPAs that they're trying to educate, but too many times, and you're going to get me started on the life insurance thing, but I'm an independent investment advisor, so I really think if um, you're tied to a company, a Wall Street company, whether that's a life insurance company, a broker. Um,
Give me an example of what that looks like. What's the difference between an independent and not that you're bashing anyone, but just because you're educating me in this
yeah, I mean, I
process.
bash them all the time just because. Um,
Yeah, give me the
So I mean,
difference.
you think about a conflict of interest. If you're incentivized to bring in revenue and only sell the company products, even if you have two companies and one's two products you can invest in, and one's they're about the same, you're going to pick the one that pays you more. So and you're only held to the suitability standard. So you're not held to the highest standard of the fiduciary standard. So it's I think that all advisors can do better. And in the independent model, you have an open architecture. You can invest and you can advise on taxes. You can advise on, and that's why I got the certified financial planner and went and passed that exam, because you can advise on taxes. Brokers are a lot of times limited by their firms of not being able to advise on taxes. And for any NFL guy, anyone who's in the top tax bracket, I mean, you're missing out on easy easy money when it comes to some of the tax planning. In our firm, we just don't see very many advisors doing it. A lot of times they think it doesn't matter, or it's just it's not enough money for the brokers trying to go get more clients. And they get you an investment portfolio. A lot of times it's basically the S&P 500, and they don't actually add as much value as they should be. And I know, as I experienced that as a player. I had an advisor at Merrill Lynch. It wasn't I can go back and look at my own situation and see like all the misses, whether it's a Roth IRA account, individual 401ks for endorsement income, just simple things that you set up and just defer money along the way to when you're in lower tax years, or tax strategy, duty days for NFL baseball guys. It's huge value add, where you're basically, the IRS is, or the team's designating certain days in certain states, and then you're going to pay the jock tax in those states, because everywhere you play, you're going to go ahead and pay their tax. So you can actually allocate and count training camp days, count mini camp days that should be counted as working, which the teams don't always do. So it's these strategies that, I mean, we have a full tax team, and
Wow, I mean
we
that's
integrate
in depth.
we integrate everything, because I don't think your whole life's not siloed. So why would your investment advice be? So we take a whole holistic, comprehensive approach. And yeah, it's why I picked, when I was looking at firms, I pretty much checked off, all the brokers and Wall Street firms, whether that's UBS, Morgan Stanley, Merrill Lynch. I didn't even want to, think about working there, because I understood what the independent model, how it actually provides better value.
Right.
And there's certain tenets in investing, whether you stay long term, you ignore short term noise, keep fees low, stay stay broadly diversified, and there's no reason you can't hit so many of your goals. I know, personally, just having the long term outlook. And I was on a Zoom with a few NFL guys, and they were just over focused on a 5% pullback, and I'm like, man, you have like a 50-year investment timeline. 5% is something I guess if you're really into the stock market, take note of it, but it's just irrelevant in your long-term, outcomes, that if you just allocate the right way, you really don't have to stress about it.
Now, when you say allocate, because it's so interesting that through this process, uh, in this fellowship, it opened my eyes up to something because they're talking about diversification, right, and just the different asset classes, how much of your overall assets or your net worth you should invest in something like in VCs. And so it made me start thinking
Yeah.
like how many different players, like I can be honest in saying, as a former player, I was only into, the stocks and stuff like that. I just had like a standard portfolio. That was it, diversified amongst that. But I wasn't in real estate. I wasn't in, the VCs. I wasn't in these other areas. I think there are five major classes. I guess if you add crypto now, there's, it's this. I don't know if
Yeah,
that's
it depends how
considered,
you define them.
yeah, how you define that, right? But I mean, I wasn't diversified across those different asset classes. And so how do you guys like encourage the people that you work with?
I mean, it's so every situation's different, and we treat each individual according to, like, what do they want to accomplish in their life. And so some people are just totally against, taking any risk. Which, if you're sitting on cash, you're actually losing money every year to inflation, and that's one of the biggest opportunity costs, is trying to time the market and not being invested when, who could have guessed last year the market would have finished up 16% during COVID, during a pandemic. So it's very tough to predict the market, but I mean, a lot of times you have a lot of allocation to real estate through your own primary home. So it depends on each person, but yeah, allocating some to real estate, some private investment real estate, um, can make sense. We call it alternatives, is where venture capital, other private equity is. And so, the really heavy lift comes from the public equity market as far as returns, and allocating smartly to proven factors, kind of a quantitative thought process to investing, rather than trying to pick, you pick your Teslas before they're Tesla. Those, I mean, it's a tough game. Most of the data shows that active management in those stock picking funds just don't outperform over the long run. So you allocate to reliable compensated risks, like relative value, profitability, small cap premiums, and then, basically the coolest thing we do here is allocate to a protective reserve, and that basically is to hedge. And we don't use hedge funds for it. We use just super safe assets, uh, fixed income, to secure, like, you know the bare essentials, that if the markets do really poorly for years, you're protected on the downside. So then
Mhm.
it allows you to take risk, and you write so there's no, just because you're risk tolerant, you're 80/20 or 50/50 or 60/40. I mean, that's irrelevant to how we approach it. Each client's invested according to their priorities, as they tell us. And the younger they are, maybe they don't have super built out priorities. Maybe they don't have kids yet. Maybe they don't have a lot of long term goals. But that's what's great about what we do, is we grow with our guys, and help them reach, levels, and get them educated early, get them to understand the markets, and why there's nothing tough to understand about the stock market if you just think about it as going to the grocery store, and there's, a produce section, and there's a cereal section, and each one is just a ownership of a public company that, has an entire team dedicated to trying to grow their value. And so when you think about it like that, it's not, it shouldn't be, no athlete should be afraid of it. No one should be worried in that sense, because it's one of the great wealth drivers throughout history, in not just the U.S. but the rest of the world. I mean, you don't want to just be limited to U.S. You want to be globally diversified.
What do you think is the biggest, for I think this is for all of us in our community, that the fraternity and the brotherhood that we came from. What do you think is the biggest issue when it comes to finances outside? I mean, I guess it always starts with literacy, right? Because I know I for sure came into the league financially illiterate. I'm still learning. There's so much to learn. And I know for a person like yourself that you have your CFP. What do you think is the biggest issue?
Well, one thing is you can't learn everything. So I think one of the biggest issues is just early on not picking the right team to help you essentially go from a young 20-year-old or whatever you are to basically learn fast,
How do you pick the right
and
team?
having
How do you pick the right team?
man, it's difficult. You got to ask the right questions. It helps when you have people you can rely on that can help you make an honest, a judgment on who you surround yourself with. And you know well as well as I do that the people you surround yourself with in the NFL can be good or bad. Whether it's um, your play on the field, what you're doing off the field. The same thing holds with who you hire to basically take care of your business. There's a lot of business managers that guys rely on that they're sometimes it's not even dishonesty, it's just the fact that they're not competent enough to really be managing someone that's going to make as much money as a lot of NFL guys do. And so I do think that there is a financial literacy component, but there is so much to learn, and I learn every day.
Yeah.
There's the journey never ends. There's always new strategies, new tax planning, new tax laws, whether it's investment strategies that always could be constantly reevaluated. But it's as much as you an education level needs to be better. And I've talked about a long time that the colleges should be held more responsible, especially for NFL guys, to
Yes.
to really educate them before they make that jump to the NFL. And even if 10 out of 20 guys don't pay any attention at all, at least you're helping the other 10 in that group. So it's it's and then it's requiring a higher standard across the. I mean, I have my issues with the financial services industry in general, um, being predatory to young athletes.
Hmm.
And and it doesn't have to be just fraud. It can just be lack of knowledge of an athlete's situation and how contracts work, and not understanding the benefits that are very good for NFL players, and the lack of their will to go learn more and find out more. When if you're going to advise NFL guys, you should.
Yeah. Yeah, no, I
I mean,
100%.
yeah,
I'm 100% in agreement with you when you say that, because I think a lot of the athletes are enabled, believe it or not, by the institutions that they end up connecting with. Because, like I talked about before, it's just, oh, don't worry about it, just go play football, just go play football. So you're enabling this idea that you don't need to further your education. I got it, and you don't even know. Like I'm sure a lot of guys don't know what they're even invested in. They just know that, oh yeah, I think I've got some Apple and some Google, and but they don't really know how it all works. And it's just like, I'm trusting. There's a lot of trust factor that goes into it. And then I'm not saying that these people are scammers or anything like that, but it just not overall being able to protect and grow the athlete, for the industry that they're in, and for the amount of money that they're making, and just for as a whole person, as well.
yeah, and I mean, when it comes to agents too, a lot of agents, they could do better with who they recommend as advisors. A lot of times they just don't. Agents are so afraid of being fired, they don't want to, risk anything by having the player, change a financial advisor or recommend the right one. They just want to recommend one that will never, cost them a player. And the whole agent model is only with you as a player. Once you're not a player anymore, you're most likely not going to be talking to that agent very much anymore. So, um,
I'm a big
as
proponent.
a long.
No, I'm sorry. I was going to say, I'm a big proponent for having those things separate. I do believe that agents and financial advisors should be separate, because just the same thing that you run into when it comes to, like financial advisors, not all financial advisors are equipped to give you tax strategy advices. Some of them just say, hey, I just want your money. I just want to invest it. I want to get my percentage and I'm out. Like, I don't care about anything else. And I think there are a lot of agents who just care about, like you said, protecting the athlete and say, hey, I'm protecting the athlete. I'm not going to do anything to get fired. I'm going to negotiate your contract and I'm going to play it safe. But they themselves may not even have the ability to vet a financial advisor and who's going to be able to grow that person. So, like those two shouldn't come hand in hand. Like I'm not going to be taking, football technique advice from a baseball player. You know what I mean? Like just because they play professional sports doesn't mean they can tell me how to tackle.
Exactly.
You know?
Exactly. And on that note about the treating yourself, I mean, if whether you know it or not, as an NFL player, you're a brand and you're a business. Your name generates income. You're a business, and your athletic play is the biggest driver of your net worth. We call it human capital, and it's not counted by anyone, but maybe us and maybe some other a few other firms. But it's a huge part of your financial structure, which is just all of your current and your current assets plus any future assets. And so a lot of times it gets ignored. It's why guys don't end up with the right kind of disability insurance to protect those future earnings. And as you play better, it goes up. And I mean, the real goal is to turn all that human capital, which is unrealized, and in the NFL, it's not guaranteed for the most part, turning that into investable assets, so you can go out there and spend the money on the people you care about, later in life. Whether that's can be anything from giving to supporting your kids to helping them, create generational wealth. It's cool to see when you have everything mapped out, and the path that the player can be on. And then you see and we see it all the time. Guys come in with we've had a guy come in before with an agent that was also his financial advisor, and just the conflict of interest,
Wow.
and the amount of poor advice is just it's disappointing. But unless you don't know any different as a player, and you don't know what you don't know. It's what I always say is,
Have you been able to break through with a lot of the athletes? I mean, because I find that you would, if anybody would be able to have the biggest value in that, okay, hey, played in the league at a high level. I went back to school. I got my degree. I got my CFP certification, right? And so I'm now more equipped than most CFPs because you understand the people and the clients that you're dealing with. Because it's one thing to have a client, but then it's a whole nother thing to understand the clients that you're dealing with and all the different, angles, because you've been in the locker room with guys from all different types of backgrounds. How has that worked in your advantage as far as like with the clients? Because I think if anything, I would want somebody who knows me. Like, I want to be in business with
yeah.
people who understands what I'm dealing with.
Yeah, and you know this very well. Is there's a camaraderie and a brotherhood with being in the locker room. Once you've gone through training camp, in the NFL, you get that you're more listened to. If you've been through, whether it's my three ankle surgeries, getting a chance to play in the Super Bowl, win a Super Bowl, guys respect that, and they respect that. And they also respect the transition. Once, especially guys that I've played with that are now since done being playing, um, that transition. And I'd like you to speak on the transition you had as well. As it's not easy to be so good at something and have a put your life into it. For me, it was like 25 years of football seasons in a row, and then you're done, and so you got to find more, something else that has purpose, and something you can put your competitive drive into. So for me, it was, and I think every NFL player that should take advantage of all the opportunities while you're playing, and then even when you're done, whether that's going back to school or trying out some of the programs that they have. I know you did broadcast boot camp. I think try out as many things as you can while you're a player, right when you're done, so that you can find something else to really go after once you're done playing. Because there's not very few people career transition in their mid 30s, and it's I mean, I don't know, think I've talked to anyone, including myself, including myself. It was just not an easy transition. It's
No.
it's it's to go from being so good at one thing and having to start from ground zero.
Yeah.
There's no way around being a rookie again.
Yeah,
So
it's very humbling.
yeah, let me know how yours
Yeah,
was.
yeah, it was very humbling and it was very hard. I came into the NFL, Zach, as an undrafted free agent. And so I always had to fight. I had to fight to get into the league. I had to fight to stay in the league. And then, I wanted to have a 10-year career. My career got cut short. So I effectively played 4 years in the league. And I went around for a couple years with the Raiders. Then I played with the Chargers. Then I played with the Dolphins. Went back to the Raiders. Got cut, and then boom, just like that, it was over. And so the question that everyone has is, what's next, and then who am I? And so oftentimes the reason why it's so hard is because we go through this identity crisis. We don't know who we
Yep.
are. We've been told our whole life, you're an athlete, you're an athlete, you're an athlete. And when you're done, the first question you get is like, how come you're not still playing? I am more than just that. Like, I have to now move on. So the rest of the world sees you physically fit to still play, but yet you know that they've moved on from you. You've kind of like are, kind of tangled up. Like, I still want to play, but I know I can't, but maybe I still. And so you're going through this whole transition, and it's hard emotionally. It beats you up, and then you now have to try to pivot. And then how do you pivot when everyone else is you going in for an interview and people want to talk to you about football? You're like, yo, like I'm actually here for the job. I'm not actually trying to talk. We can talk about that later at another time. And so more and more it's just like you start to feel like you have no value, you have no worth. And so for me, I thought that my biggest advantage that helped me propel my broadcast career was I knew that I just kind of knew how the world works. I'm just keeping it real, keeping it 100. Is that most people, and you probably, it'd be interesting to even hear your story, but the day you're done in the league, I say about 2 weeks after, you can't even get a phone call back from your old teammates because you're on the out now. You're not on the in. And the same type of advantage, or like you could call a company or you could call somebody, people don't respond to you the same way. And so I had the blessing of being cut in 2005. So I went 03, 04 with the Raiders. 05, I thought I was going to get picked up. I didn't get picked up. And that 1 year my world changed. Nobody responded to me the same way. Not even my own teammates who I would go, yo, let's go hang out. No, I can't hang out with you. I'm like, man, I don't got leprosy. Like, I mean, we can still. Oh, I was like, oh, I'm not on the end. And then the people that I say, hey, can I, can we do this? Or I would love to come meet with you. Nobody wanted to meet with me. So I said, all right, I got it. People didn't value me unless I had this NFL shield. When I got back with the Chargers, it's when I said, you know what? I'm going to take advantage. While I have the shield on my on my resume, I'm going to use that to get into doors. So when they provided the broadcast boot camp, I took full advantage of it. When they provided the Wharton School of Business program, I took advantage of it. All these different platforms I took advantage of so I could utilize it to network because your net worth is associated to your network. And if you don't have a good network, when you
Yep.
transition, it is going to be extremely difficult to kind of find your way. And so long story short, I used that opportunity to then build my relationships. I went in to start doing broadcasting locally at in San Diego, where I played at
Yeah.
San Diego State and with the Chargers, and then that got me into college football. College football got me into the NFL Network, and then from there, I had an audition for American Ninja Warrior. Ended up as the host of American Ninja Warrior. Now I know I went through that pretty fast, but it took me in all 5 years before I got my broadcast career started and moving in the right direction. But again, I went through that quickly. But from 2008, I didn't get the NFL Network until 2012. I didn't get the Ninja Warrior until 2013. So it was a lot of grunt work in between.
Yeah, and that's one thing any NFL guy will understand is all the fans see you only play on Sunday, and they don't see all the work that goes on during the week. It's the same thing, and you wonder how these guys get to be such great players. Well, they've been playing since they were 10 years old or whatever. So it's no different than when you're starting over in a new industry, and if you do it like you did and leverage yourself correctly, but you still have to put in the work, and it is the grunt work. I started as an associate here and did all the grunt work, and that's how I wanted it because I wanted to learn from the ground up how everything works from simple wire transfers all the way up. So it's not just coming in straight from the NFL and saying, oh, because I played I can advise you. It's like, no, like you need to prove yourself, and that's part of the reason I went
How many people
back to school and did the CFP.
how many people ask you like, "Oh, you're Zach Miller. What are you doing here? You don't need to work here." How many
Exactly.
like
I
yeah,
know.
you get that where people go,
I had a couple firms were like, I don't think you want to do this. Like I interviewed at other place and they're like, yeah, yeah, I don't, we can't see like why you would work here. So we're basically like not interested.
Right, which is crazy because
Yeah.
and it's and I say this to a lot of people for people who may not have empathy for the professional athlete trying to transition, because oftentimes we're blinded by the or we are covered by the amount of money or the perception of the amount of money that we have when we leave the game. So people have a hard time empathizing. But I often say that transitioning from the league is what most people go through when they retire. They've worked 30 years in an
Right.
industry and then they
Yep.
retire at 65 years old, still very young and still have a whole lot of
Yep.
life in front of them. And then going, what do I do next? And there's that empty feeling of, there's this depression that sets in because you're like, I don't know. But imagine feeling that at 30 years old, 32 years old, 33, and you're going, hold on, I have the rest of my life in front of me. And now people are responding to me in a way like, oh, well, you don't need to do this because you have money. Like, hold on, like just because I have money doesn't mean I don't
Yeah.
want to work.
I know. Yeah. And I was lucky to have a high enough savings rate when I played that, I don't have to come to work, but I want to come to work because I know how much better guys can have it. And, all the things I know I want, the guys like myself, other guys that I played with that I know aren't getting the best advice. I'm like, dude, it should be better for you. So, I enjoy, doing it. I enjoy getting to talk to the guys and, even it was the Zoom call with the other NFL guys. They're doing the stock picking, and it's the same thing I was doing, in 2011, 2012, and getting into the real names and not knowing anything about how to value a company, but just buying it because I thought it was cool. And but I think it's great. And I think guys should do that with just a tiny bit of money, just so you can have experience with stocks and get that exposure and realize that it's definitely something that obviously don't go crazy. And so many guys with the Bitcoin now and how volatile it is. It's you want to make sure you allocate properly. But yeah, when it comes to just a small play money account, man, I think it can teach you a lot of lessons.
Well, I will have to say, I'm going to raise my hand on this one and tell myself I got a little carried away in the allocation process as far as crypto. And it's something, and I can be transparent with you, is that, there's a lot of speculative buzz around cryptocurrency. And that FOMO starts to get it, in your way. Like, I'm going to miss out. I'm going to miss out. I'm going to miss out. And so, what started off is, oh, I'll put a little in here just to play and see what it's like. And then you're seeing these numbers going up. You go, well, let me put more and more and more, and not really understanding like this whole system, And so being able to allocate the right amount, I think, is the key. I can say from experience because now we just saw this major, major dip in the market and
Yep.
and I was just like, hold on, what just happened? And then on top of that too, just learning that you can't even you can't even capitalize on the downturn because maybe you're over, like for me being overcommitted. Now I got to just sit and wait
Yeah.
for things to rebound because I overcommitted too fast.
Yeah, I mean, and it's one of the first things you learn is right sizing your positions because it's how even some of the smartest, best investors get caught over leveraged or basically just too heavily allocated to one single, whether it's stock or asset class, and you get hammered. I mean, it's why we have bubbles and why markets are cyclical, and that FOMO is just, I mean, it's intense,
Yeah,
and it's
yeah,
everyone, especially in a locker room. You think everyone's investing in this. They're like, oh, I want in on that. I want to have part of the fun. I mean, and then so we always try to really help guys. Are you gambling or are you investing? Because they're not the same. One has an expected return that's pretty good, and the other one's maybe less than 50-50 shot.
right.
So,
Well, you're dealing with a bunch
yeah,
of alpha males that are highly
I
competitive, and
know,
I
I
find
know.
that the FOMO only gets worse when you are competitive. Like when you're competitive, like, oh
Oh
no, no,
yeah,
I gotta jump it, I could do it, and and then you mix a little bit of pride in there. That turns into a complete
yeah,
disaster. And yeah. So, anyways, lesson learned for sure. But going back to what you're
I
talking about,
know.
what we
Yeah.
learned in next play too, the valuation process I thought was really, really interesting. and how to, look at a company and really going, hey, is this a company, whether you're doing it through a VC or you're going to make the individual investment, how to really take in that formula, the Tom Kapar thing that we went through, and just being able to ask the
Tom Capper.
yeah, 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 ask the right questions so you can go, okay, hey, we're going to score this, we're going to look at this, and have the right questions to ask, and then they're going, is this the right investment for me? Having that to me was genius.
Yeah, the process is amazing, and then it really makes you think like, okay, so they're looking at, 200, 300 different companies a year and scoring them all and only taking the best. So as an NFL player, if these firms and these venture capital are already looking at the best companies and you get a deal from a private investment, you got to wonder like how many other really good investors passed on this deal before it ended up to me. So then you
Oh,
put
yep.
that red flag up like, hey, there's already a ton of people competing in this space. Why are they bringing this deal to me? Is it because everyone else said no? And then you got to kind of say, hey, I should probably have someone look at this that can really help me, or just say no depending on where you're at in your career.
And most guys I know from experience, not from my own personal experience, but from guys that I know, that most guys don't even try to vet it with other experienced people because they think that someone's either going to steal their opportunity or they don't want to expose themselves. So they go, "Oh, I'm investing." So some of them are more in love with the idea, like, "Oh, I invested in this hotel concept business," and they want to feel like they're baby Magic Johnson and they're just invested in everything. And so they like the name and the title and the feeling more than the actual knowledge that it takes. And so that's where, image and all this other stuff where social media can make people very image conscious. Like, what do I look like versus what's the reality? And I've seen it way too often where guys are investing in things and not just, I'm gonna keep hush. I'm not gonna tell anybody about it. Either I don't want anybody to jump in on this, and I want it to just be just for me because I think I'm about to really make a lot of money. And then chances are, if you're hiding it, chances are you're getting scammed.
Yeah, yeah. It's and I mean the numbers they're pretty bad. The data for athletes that get basically sold bad investments, whether that's fraud or just zeros. I mean, it's higher than everyone else. So
Yeah,
athletes as a whole get taken advantage of because it's an information disadvantage. You just don't have you're not experienced enough to be able to really invest the right way in whether venture capital, private equity, private real estate. And so you're an accredited investor. And so that means that because of your income, all of a sudden you're an accredited investor, which usually you have to be much older to become an accredited investor. But that SEC rule just doesn't fit for athletes because you have high income and you're young. So um, there's definitely having the right team around you who can vet those deals is, I mean, can save a lot of money for a lot of guys, and then make a lot of money by getting it invested the right way. And I think that's one of the biggest takeaways that I had from Next Play, the fellowship is their commitment to informing guys kind of how to do it the right way, or just one way to do it the right way, and then being smart about just investing in general. Of if you're going to do it, here's how you should do it, or here's how one way to do it that would be better than a lot of other ways. So obviously, I think I think more guys should do it, and seeing all those other athletes from other sports participating in it and their dedication to being able to provide that. I think it's a great thing to see, and I hope to see them expand the class size even more,
yeah.
and continue to inform and educate the next round NFL guys.
Yeah, no, that's pretty cool. And let me just also clarify that when I say scam, I'm not saying scam like it's always fraudulent, but scamming meaning that you got into a bad deal. So not
Well, yeah,
everybody
there's
that's
there's plenty of both.
yeah, right.
There's plenty of both out there. There's a lot. I mean, you see it all the time with the lawsuits in the financial regulation websites. Is there's bad advisors out there. There's lots of them, and it's everyone calls themselves a financial advisor, and it's like, yeah, I mean that is too loose of a designation. You should
Yeah,
definitely have more than.
can you add clarification to that? Because I don't think I'm even aware of the difference between a financial advisor and a CFP, because a CFP is like the highest level you can get, right?
Yeah, there's CFP, certified financial planner, and then some other really good ones. Chartered financial analyst is a CFA. Both of those are rigorous exams. Um,
So when people
and
say I
then
have
for
my guy,
taxes,
I have my guy, in the league, you hear that a lot,
yeah, I
my
mean,
guy.
so technically you can just be a life insurance salesman and have a series 63 or whatever and call yourself a financial advisor, because and just really just be selling some type of whole life product or some overpriced insurance that doesn't make sense for most people. Because think about it, that's where the money is. If you sell a lot of policies, you can make a ton of money and you don't really actually do any
Okay, can you
advising
break
you
this down?
besides getting that policy in place.
Zach, you got to break this down, because since I entered into the NFL, uh, until now, until adulthood, I mean, at least 2 times a year, I get hit up on I get hit up on life insurance. What is the big sell? Why is there such a push? I get that there's big returns on the end of it, but why is that being sold as the ultimate financial tool? And you hear oftentimes, what I hear is like, oh, this is what the rich people do. This is what the rich people do. This is how they're able to get by and make tax in this, and like you got to buy this, and for me, I'm just like, no, I'm not doing it. My brother told me a long time ago. He's like, you
I
got to
mean,
stay away from them.
there's a place for life insurance, for sure, but as a primary tool to go about investing, I just think you can do better. There's certain strategies, and whether it's estate planning or ultra high net worth, there are strategies where you do use life insurance. But anytime your guy is always telling you life insurance policies, you probably should evaluate him again.
Yeah. All right. It was good to know. That is good to know. My guy isn't doing
I
it, but
won't write off.
yeah.
It's like any tool, and it's typical of the financial services industry. Is when you tie things to sales or commissions, a lot of times you get guys that are all salesmen and they actually don't know anything about finance. They don't know anything about planning strategy. So, I mean, I think certified financial planner is it's only going to keep growing because it requires you to know everything about taxes, estate planning, investing, insurance, just basic personal finance, blocking and tackling, those kind of things. That to be able to give good advice, holistic advice, all those things are interrelated. And whether you're trying to protect against risk, you have to use insurance. So why wouldn't you know a lot about it? And the just portfolio management, I think, is a byproduct of that. And you shouldn't just have just a just a portfolio manager. That's not very valuable. It's the coordination and the implementation of all those areas that actually add a lot of value.
All right. Nice.
Well, I took up plenty of your time today, so we'll wrap it up. Do you have any parting words any active young guys, recently retired NFL players that might be listening? What's your go-to on them?
Well, I would first off, say to the young guys coming into the league, guys who are actively playing, that you are more than just an athlete, and that's just the mantra I think that is becoming more and more popular. But I mean it on so many different levels, and that as a person, as an athlete, as a father, as a son, as a sister, or as a brother, that you are, or even as a sister too, for the that you are a whole person. And so we hear oftentimes in the locker room that that this is the you got to be privileged to be playing this sport, and you're never going to make this amount of money ever anywhere else. And and so players get really just like dialed in, and they lock everything on the outside. You're only going to play this game between 2 years minimum, maybe you're lucky to play 10 years in the league. But even if you do the math, you come in the league at 21, 22 years old, you're done in the league at 30, 33, 27, 28, somewhere in that range. You still have the rest of your life to live. And so I would say take advantage that your net worth is associated to your net work. And so if you can learn to use the network that inside of this brotherhood, inside of the sisterhood, depending on which sports you're playing, being able to use that network to be able to further what you want to do after the game. And if you don't know what you want to do, I just tell guys, spend time with yourself. Cut out all the noise, cut out the social media, because oftentimes the hardest person to get to know is yourself, because you spend so much time trying to portray a certain thing, whether it's by your image and your clothes. And all the NFL players got Louis Vuitton bags and chains and suits, and they're so we're so involved in what we look like. We haven't spent a lot of time with dealing with who we are on the inside, because if you know that, I promise you, as a player, you can call the CEO of any company and they will take your call and they will take your meeting. Guarantee. Let you be one day removed as a former player. Say, oh, I used to play, and see how hard it is to get that meeting, to get that phone call returned. And so I say take advantage of the platform. And the only way you can take advantage of it is if you know who you are. If you know thyself, you shall never fear a thousand battles.
I love it. I love it. It's so true. So true. We'll link your website, your book in the show notes and everything.
Thank you so much.
And if you're interested, yeah, if you're interested, anyone who's listening to the Next Place Fellowship next time, email me, zmiller@awmcap.com, and I'll forward your information to the Next Play guys for the next fellowship that they're going to put on eventually. So Akbar, thanks for being on with me. And until next time, I'll see you guys later. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.